We expect RBI policy rates to have peaked for the current cycle. Historically, Indian 10-year bond yields have declined by a median of 100 basis points when the rate cycle has peaked. We also expect a lower central government fiscal deficit and stable state level fiscal deficit. Hence, overall borrowing is likely to decline relative to GDP. Further, two important drivers of Indian government bond yields are crude prices and US Treasury yields, both of which have turned positive. The nominal yield curve is elevated, and on a risk-reward basis, fixed income looks like an investable asset class beyond the asset allocation principle right now. Time to dial duration is apt now. Since the announcement of the addition of India's GOI bonds to JP Morgan Bond EM Index, we have already seen net inflows to the tune of 40,000 crores in FAR securities. We see this demand for FAR GOI securities to continue through 2024. Bloomberg has also proposed the addition of India bonds to their EM index, which will act as a tailwind and further boost sentiment for government bonds. We, as a fund house, are overweight on GSEC across our portfolios and expect the average 10-year benchmark GSEC to trend towards 675 to 7% range during 2024. On the liquidity front, we see an easing of financial conditions because of inflows on account of bond indexes inclusion that we discussed, and we expect that the monetary policy stance will change to neutral and banking liquidity will be taken to surplus to the extent of 0 to 1% of NDTL and overnight operative rates near to SDF repo corridor by the middle of next year. In 2024, actively managed duration funds will do well within the fixed income space, and we would advise short-term funds, that is ABSL short-term fund, ABSL corporate bond fund and ABSL banking and PSU debt fund as the best risk-adjusted fixed income play for 2024. Investors can also look to invest in ABSL income fund, ABSL long duration fund in the active fund management space as a tactical play, which are well positioned to benefit from the current opportunity in Indian government bonds and the overall interest rate scenario. On the passive side, for similar reasons, we are also advising investors to invest in ABSL CRISIL IBX Gilt April 2029 Index Fund and ABSL CRISIL IBX Gilt April 2033 Index Fund, both of which have a dominant portion invested in GOI FAR securities and are well positioned for the current interest rate scenario. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। स्कीम संबंधी सभी दस्तावेजों को ध्यान से पढ़ें।